I was shocked when I saw what gold did last week. Quite all right, I mentioned that we had two liquidity grab the market was eyeing, which was this and this. So, but because market was close to this on Friday, so I expected money to open. Market can just come and take it before we go to the upside. I mentioned it, but as markets would open, markets went straight into this first liquidity grab and came all the way to the downside. And remember, I mentioned that if market holds at this liquidity, expect a push up. But if market does not hold, just expect market to keep going to the downside. One of the reasons I was expecting market to hold here was because I was expecting market to just grab this liquidity, come up. But since this has been taken already, market just had to flush to the downside and market just kept going to the downside. Was I expecting a reversal at this point? Yes, I was expecting a reversal because I mentioned it that in the last days of the month, expect market to give you a reversal of a movement. So I expected this reversal, but just I didn't see it coming. I didn't see this. I didn't see gold pushing up to this point. So, which is making me this week now, the market is looking dicey. More like it's in the middle. It could either go up or down. So we explain all that. And another shock that I got from the market was Thursday formed the low of the week, and Friday formed the high of the week. This is the first time it's happening. I'm going to show you on my table. I've never seen this happen before. So two shockers. I fully absorbed it. My account didn't suffer so much because I wasn't risking too much. I wasn't adding to a losing position. So I will quickly share you my table Thursday and the number of pips that market did from this low to this high. Let's quickly check so that we can update our table once and for all. If I was too long, I would expect this. So we got a total of 2,280 pips. Let me quickly update that. 2,280 pips. And we'll still have to come back to this chart because I have to check the low of the month and the high of the month. So the low formed on Thursday, the high formed on Friday. We got a total of 2,280 pips. And this now becomes 12. And this becomes 4. Then now we have to check the high of the month and the low of the month. Let's check the date quickly before we proceed into what we're expecting to get this week. Okay, let's check daily. So for May, the high of the month formed on the 12th of May, which was a Tuesday, and the low of the month formed on the 28th, which was a Thursday. So 12th Tuesday, 28th Thursday. Let's update that. So we have 12th Tuesday, and then we have 28th Thursday. All right. Now that we have that, also know that in as much as Monday didn't give us what we were expecting, Tuesday we didn't get any information. We didn't get any this table updated like any of the Monday, Tuesday, and Wednesday. Just know that coming weeks we will still see a change in this number. So you still need to pay attention to Tuesday, Monday, and Wednesday. But more importantly, pay more attention on Monday. Remember, I mentioned this in the last week forecast. I said Monday is very important. And from Monday, we got a massive push up. And then from the liquidity grab, market started falling to the downside, all the way down, before market picked it up on Thursday and start pushing back up. I wasn't expecting market to even push up to Monday's high, but as I told you, I was shocked when I saw market pushing beyond Monday's high. But so yeah, apparently Friday decided to snatch Monday's glory. Let me just put it that way. So let's quickly go to the charts, and I don't want to waste much of our time. Let's go into the chart and see what we can expect for for this week. For this week. So first things first, I have to delete all this. Then since it's going to be a new month, let me go to monthly time frame to see what we can expect on monthly time frame. So first things first, we need to understand that monthly has been doing a perfect job. Monthly time frame has been doing a perfect job in the sense that the next candle has been tapping. This candle tapped this OB. This candle tapped this rejection block, and now I'll be expecting the first thing I'll be expecting on monthly time frame is that this place is tapped. This place is tapped, which is the rejection block. So we have a POI we are eyeing on the monthly time frame that I expect. So price can tap it and go beyond it based on monthly time frame. Now let's go into the weekly time frame to see if we have a recent breakout that we can use, because breakouts is our direction. So using weekly time frame, market failed to close below this low. So this failure is signifying something. This failure is signifying something that markets might still want to push up more before we even get any positive downside, because it could have just closed last week and the previous week. So we had 2 weeks the market tried to close below this line. It was not it didn't work. So I won't be shocked if market keeps pushing to the upside. But before market keeps pushing to the upside, we should expect price to come to a particular place. So the first place I'll be marking out is this place, which is the OB, and the second place is the rejection block. So once price can come to this place, I won't be shocked if they go and buy from there. But we can't just decide on that. Let's go to the daily time frame to see where our breakout is. On daily, we have okay, you see, even daily didn't close below this, which is signifying strength from buyers. Buyers are actively present in this market, and the last place we got a breakout on the daily time frame was this. Let me quickly mark that. Was this. So what am I expecting now? I'll be expecting I have to do a slight refinement of some POIs. For instance, I have to do a slight refinement of this into this. Then I have to do a slight refinement of my POI too. The buy POIs, I have to do a slight refinement of that. I can do a slight refinement of this into this. And let me see if I can refine last POI for the buy. I can do a slight refinement of this into this. So daily has done one major thing I was expecting it to do, to hold above this swing high, and it held above this swing high, and anything can happen at this point. Market can decide to, flush down or respect these POIs. Let me find this. Respect these POIs before going to the upside. So it's a two-way thing for this week. You don't get it twisted. Don't overthink it. Market can decide to test these POIs before buying. Yeah, buying at least to this point before we get any major move. This is what I really want to see. This is what I really want to see, because if market does that, it's going to give us more room to come into the monthly POI, and then from the monthly POI, we can now see if sales can continue. And we can see if sales can continue. But the first thing I want to see is if market can retrace on Monday or Tuesday and I get a buy from here, I will take it. But if market opens and it pushes up to close above this place, we can maybe on Monday or Tuesday, market pushes up to close above this point. Just expect market to come down for a retracement into these zones, either of this one or this, and markets will push back to this place. So you need to just watch out for Monday. Monday is very important. Like I always say, watch out for Monday, see what market price is going to do, because we can't say this is what price is going to do specifically. But we need to just play along. We need to react to what price is showing us. So if price closes above daily POM, daily swing high here, expect a reversal before this push. But if market decides to just come down first to do a slight retracement, in fact, the retracement can be up to 50% of this Fibonacci. If market gives us a 50% drop, like let's say into this Fibonacci, yeah, you can expect maybe on Tuesday or still Monday. Just focus on Monday, Tuesday to pick your buy trade. And also remember, this is going to be the first week of the month. So you must pay close attention to every of your setup, especially on Monday, Tuesday, and Wednesdays, to catch either the low, or if market pushes up to close above this place. You can also use your Fibonacci to determine when price is going to to push to. So if price pushes up to this 0.618 on Monday and price closes above this place, just expect a slight refinement into this before we push to the upside. So this week, I want to just play along with what I see. I don't want to act like I know it all. I'll just follow price as it is going. So remember, anything can happen in the market. It is why you must conserve your capital. Do not trade, or do not revenge trade, because that's one of the things that make people lose so much money in the market. Do not overtrade. Do not add to a losing position, and trade with care. You don't need to trade all the whole day. I've told you Monday, Tuesday, Wednesday is very important. It's not a must for you to trade on Thursday and Friday. Once you get a trade on Monday, Tuesday, and Wednesday, you can hold till Friday and just watch your trade play out. All right, that will be all for this week. Like I said, I don't have much to say. That will be all, and I'll see you in the next week forecast.